Hi guys, welcome back to my channel. Kelvin here. While many of us are looking at the US stock market rallying upwards and be like moon, moon, moon. Meanwhile, China on the other hand isn't doing so well. And no, it's not just the stock market. It's a lot worse than that. Remember Evergrande? I talked about them 10 months ago and I thought that it was the end of the story. Well, I was wrong about that. Since then, a lot of crazy stuff has happened. There's a property crisis going on, which has already wiped out $90 billion of developer market value. Many home buyers all over China are threatening to boycott mortgage payments. People are waking up one day to find that they are unable to withdraw money from their own bank accounts. And worst of all, China's economy is on the brink of collapse. So in this video, I want to explain everything that's going on. And more importantly, how it will affect you. But before I start, I would greatly appreciate it if you can help to tap the like button and subscribe if you haven't done so. In return, I will show you a sleeping squirrel. Alright, let's start right now. So, to understand what's going on, you need to first know this. For many Chinese people, being able to own their own house is a big thing. Like whenever my wife watches the Chinese dating variety show, I will notice that the girl usually asks if the guy has a property or not. Otherwise, she wouldn't accept him. It was found that home ownership rate in the US is just 66%, while in China, it's as high as 90%. Now, I'm sure that you don't find it impressive, because after all, Singapore's home ownership rate is also super high at 91%. But here is where it gets exciting. While real estate only contributes to 15% of Singapore's GDP, for China, it is estimated to be as high as 29% of GDP if you include related industries, meaning almost 1/3 of China's economy is in real estate. So, it's super big. All this started in the late 1990s when the country was undergoing rapid urbanization. Many people migrated from rural areas into cities in order to find more money. Then, because of the high demand for property prices just kept going up and up. According to data, in Beijing, the property price to income ratio is at 25, while in Shanghai, it's at 20. Meaning, you will have to work for 25 years just to be able to buy a house in Beijing. Meanwhile, in Singapore, it's just 11.2 for resales. So, okay lah, Singapore houses are still cheaper than China, yeah? It was also found that Chinese households store 70% of their wealth into real estates. So, if you are a property developer and you see that there's such a high demand for properties, what will you do? Print more properties! And that's exactly what they did. Evergrande and many property developers start building new homes to sell. At one point in time, they were building 5 times as many houses as America and Europe combined. As a result, home vacancy rates in China were at a super high 22%, and there were enough empty houses to house over 90 million people. Basically, 15x of Singapore's population could easily fit in all those empty houses. But there's one problem. Many of the houses that they were selling were unfinished. The term for this is called pre-sale model, where property developers will build unfinished properties, then sell it to buyers. They will then take the money, build another round of unfinished homes, then sell it to new buyers. Then they will use the money collected from new pre-sales in order to build the older properties. Basically, if you draw it all out, it's a Ponzi scheme already. 85% of Chinese homes were sold through this model, and it was estimated that only 60% of homes pre-sold between 2013 to 2020 has finished building. Right now, China has about 225 million square meters of unfinished homes still waiting to be completed. At the start, people were okay with this because they felt that housing prices could literally only go up. But like any Ponzi scheme, this pre-sale model would only work if there are new funds coming in. And as it turns out, this model stopped working in 2020. Quick pause. Weibo is the latest stockbroker in Singapore. With Weibo, you can now buy US stocks, US options, and Hong Kong stocks for a low fee of $0. Yes, that's right. It's zero commission trading. Weibo also supports fractional shares. So you can now buy stocks with just your $100 Angbao money. But the most important question is, what's their sign-up gift? If you sign up now, deposit at least $1,965, make 6 buy trades on either US stocks, ETFs or options, you will get $100 worth of free Google shares. This promotion ends on 1st September, yeah? So if you are interested, you can sign up with my link down below. With that being said, let's get back to the video. In 2020, the Chinese government saw that there was a property bubble going on. And as usual, the government suddenly plopped down a new rule out of nowhere. This time is the 3 red lines rule. Basically, it's to make sure that property developers don't go all ape mode and over leverage too much. But it was too late already, because by then, 2/3 of the top 30 developers were violating at least one red line. At the same time, the pandemic happened. With all the shutdowns and businesses failing, it was causing a lot of economic uncertainty. This led to home buyers thinking, maybe I should stop YOLOing into properties now. As a result, demand for houses fell and prices started to fall. All this caused property developers to default on their debts, including Evergrande, which had trouble paying $300 billion worth of debt. Then in June, some home buyers finally got fed up with all these unfinished home delays and started boycotting mortgage payments. And by July, the boycott spread to home buyers in more than 300 projects in 50 cities across China. But wait, that's not all. At the same time, there were some shenanigans going on in Henan and Anhui rural banks. On April 18, as many as 400,000 customers across China suddenly couldn't withdraw money from their own bank accounts. So they started demanding the banks to return their money. This continued on till July, where 1,000 people gathered in front of the bank to protest, which of course didn't make the authorities happy. Police then discovered that a bank fraud was carried out by a criminal gang and arrested some people. But what does this have to do with the China property crisis? Well, a lot to do with that. That's because China banks use something called fractional banking, where they can lend out up to 90% of the money to a borrower, who would then spend the money. The earner would then deposit the money back into the bank, who would then lend out 90% of the money again. If the banks keep on repeating this, they would eventually over-leverage by up to 10 times. So remember that home prices are expensive in China? This means home buyers have to take out loans to buy houses. It was found that mortgages made up almost 20% of all outstanding loans in China's entire banking system. With all the mortgage boycotts going on, people losing confidence in China banks over-leveraging, there are serious risks that bank runs could happen, which it did and has already caused the collapse of a few rural banks. So now, what is China doing? For depositors who couldn't withdraw the money, China has started repaying people who had savings of up to 50,000 yuan first, with the rest subject to further notice. As for the property sector, China doesn't want to bail out the entire sector, because by doing so, it would mean that they are admitting that they are in trouble. But at the same time, they also want to avoid a total collapse. So on the local level, a bailout fund was set up with a state-backed developer to help out with some local projects. The China Central Bank will also be issuing a $205 billion loan to help with stock developments. But analysts say that the money would definitely be not enough to resolve all the debt problems that the property developers are facing. At the same time, China has lowered lending rates, hoping that it will boost the economy. So that's everything that's going on in China up till now. Everything still seems fine for now. But with China being the second largest economy, you can imagine that if things get worse, the crisis will spread and affect everyone. Fitch Ratings had said that should defaults escalate, there could be broad and serious economic and social implications. The US Fed had also said that while China has managed to contain the fallout so far, a worsening property crisis could impact the country's financial system. If things get worse, we might see another crisis, just like what happened during the 2008 financial crisis. But for now, we will just have to wait and see what happens next. With that being said, there's no point getting worried about this whole thing, because it's not within our control. Personally, I'm always keeping some war chest money on the sidelines. If things do get worse and the market crashes, I will just dump in my war chest money. Otherwise, I will just dollar cost averaging in as usual. Win-win either way, because stonks. Anyway, that's all for this video. But what do you think about this whole crisis? Do comment down below and let me know. Like, share and subscribe, as I'll be posting new videos every Monday, Wednesday and Friday.